Good afternoon, everyone. In today's video, we're going to talk about the volatility that we saw in the marketplace as a result of Trump's tweet stating that stimulus negotiations were going to be put on halt. As a result of that, we saw a good amount of volatility. It was something the market did not expect, and that was really reflected in price action. So in today's video, we're going to discuss three simple things. One, the futures volatility box setups that we saw as a result of this volatility. Two, the stock volatility box setups along with results there as a result of the same volatility in the catalyst that we saw. And then finally, three, some setups off of a daily time frame chart in the Nasdaq, along with one particular stock for really giving us both a bullish along with the bearish trade opportunity. Now, starting with the S&P futures first, we'll start straight with our doomsday conservative models. The scalper was broken, the aggressive was broken, the doomsday aggressive was broken, and the conservative was broken all before we saw any sort of edge signal. So that took us to really our most conservative model here, which is our doomsday conservative model. And that's really the benefit of having 5 different models, at least with the futures volatility box. You get to adapt to whatever volatility conditions based off of whatever catalyst you may be seeing in the marketplace. Now, with the S&P futures here, via the doomsday conservative model, we had price action breach our cyan line. You'll see that we just opened and we actually are still respecting so far the breach. So we'll talk about that in just a second. But here with our doomsday conservative models, when we had price action falling, we fell into our doomsday conservative models and we had a pretty sharp reversal, all of which happened before we saw any sort of edge signal confirmation. So that's to say this was a very, very aggressive trade reversal for those looking to be very aggressive. And this is usually caught mostly with the futures, micro futures, or SPY options for those looking to try and participate in this move. Now, the move that we were looking at here, if you take a look to see what that bare minimum move looked like, that's a measure of taking the cyan line to the outer edge of the volatility box clouds. That was right around 13 points on the S&P futures. So that's not any sort of small risk trade here. And that's an aggressive trade. But if you take a look to see if we made that bare minimum first move, we did in fact see a reversal, 15.9 points in fact, before the S&P ultimately ended up still coming back outside of the clouds here, but you had already hit your first target. So the doomsday conservative models were the ones that were being held. Now into the final hour here, I'll quickly talk about this since the market's just opened again with the afternoon hours. We had price action breach our cyan lines into the final close here, and you even got the edge signal confirmation, all of which suggests that into this 3 p.m. open here, we expect to see a reversal or at least a bounce up higher. Marginally bullish move here where you see at least this bare minimum move being met, which we already saw hit the target. Now, this isn't really a trade that I like to participate in. I think that afternoon gap risk is a little too high, but for those that are willing to be a bit more aggressive here, that's a bare minimum risk of right around 4.75 points on the S&P futures. And you'll notice based off of the open here, we already hit our bare minimum move, and you're currently up plus 6.83 points. And so that's to give you an idea of what you can expect into the close and still use these models to try and position yourself for the after hours activity. For our members who like to trade the afternoon hours, that's where I would first start off based off of what you see in price action in this first hour with the doomsday aggressive models and then scale up based off of the kind of volatility you're seeing if we go outside of the clouds. I think the doomsday conservative offer you sort of the best, most conservative models, but are also the ones that are least likely to get breached. The doomsday aggressive is, I think, the most aggressive models that I'd be using for after hours activity, which I do expect to see a good amount of volatility in today's after hours based off of what I think we closed at, along with what we saw in the actual daytime activity. Now, if we contrast this with, say, the Nasdaq, you'll notice, did not breach the doomsday conservative clouds, and even in the after hours, we didn't see that bounce. And if we then switch over to the Dow, you'll notice the Dow broke outside of our volatility box clouds here, but even in that final hour, still we're seeing that same bounce, right? However, based off of this, using the S&P, the Nasdaq, and the Dow, you should very quickly be able to judge that the Dow is the most volatile, the S&P is second most, and the Nasdaq is the least volatile of those three markets. Now, if I show you a chart of the Russell here, the Russell you should notice, similar to the Dow here, we broke outside of the clouds. You come in towards the after hours, you didn't see that same sort of steep decline to the cyan line, all of which suggests that now on the Russell, you may actually be looking at something like, say, the doomsday aggressive models, trying to see where you can capture price reversals, considering that via our doomsday aggressive models into that after hours activity, so far we've respected the cyan lines. And so that's how I'd be looking at trying to trade after hours, at least for today, given that we saw a good amount of volatility during the regular market hours. Now, if we switch over to some stock charts, before we actually do that, I'll talk about some statistics around the stock charts here. So that's where we have really two different models for our stock volatility box, and each of those two models, you have both a long and a short side setup. So via the aggressive long setups here, this is only in the 11 to really 12 and then 12 to 1. So the last 2 hours of the market hours in which the trade had to have been on our live scanner for at least 3+ minutes. So that's to give you an idea of trades that you could have actually caught. So that's the 11 to 1 Pacific hours, the final 2 hours. And then it needs to be plus 3 minutes on our live scanner, which is the machine that we've built, which goes and finds all trade opportunities that we have. So now using those two conditions, these are the results that we have right down here. Based off of the aggressive long, we had 102 trade opportunities for a net winning percentage rate of 66.67% and a net P&L, this is using just one share, of positive 12.76. Whenever we see this number above zero, that's a great sign. Whenever we see the number below zero, that's a bad sign. So using that, 1276 is a pretty nice sign off of the 102 trade entries. So that should give you confidence for the most part that, hey, aggressive longs work today. Now you come into the aggressive shorts. Keep in mind, just using logic here, that shorting the market when the market is falling, and this is where the machine's telling you that, hey, you still have some sort of an edge opportunity here to short the markets. We had 19 trade opportunities. Out of those 19 trades, 94.74% win rate, positive 4.85. Again, a great sign. Now you come into the conservative longs here. That's 14 trade opportunities, 71.43% for a positive 1.52. And this right here is the power for all of our members who've seen the note in our stock volatility box. This is using machine learning now, where we're starting to become just really smart about the trade opportunities that we're looking at, and our models are starting to adapt much, much better. That's just the first phase. We have the second phase rolling out soon, which I think is going to just continue to improve on these models. And you should notice that at least as you start to trade with these models a little bit more. So that was the stock volatility box. Now, if I show you some exact setups here, so if I load in, say, the SPXL here, that's the bullish S&P 500 ETF, and we'll start with actually loading in our conservative volatility box here, mostly because I think for a lot of folks, when the market's falling like that, you really want to be focusing on the setups that I think offer you the greatest edge, the ones that I think are least prevalent on the live scanner, right? And that's the conservative model here. You'll notice in the case of the S&P 500 bullish ETF here, you hit our volatility box entry line, which in the case of the stock volatility box is the beginning of the clouds right here. The stop is outside of the clouds. The first target is the gray target line. You have that reversal almost right away. Now, typically we're looking for an edge signal here, and all the setups across the board, futures, stocks, for the most part, were much more aggressive today because we saw a very touch and go type of scenario today based off of the news here. But this should still give you an idea of the models, the raw profitability of the models, along with what that actually looks like. So now in the case of the SPXL, you saw a pretty nice reversal from our entry point. To give you an idea of what that looked like, that was right around 2.5% when you actually come down to the actual clouds here in terms of a reversal before we ultimately came back down and we touched the clouds one more time. For those that don't like to trade the leveraged ETS, you could also use SPY, SPX, whatever really floats your boat there. If we take a look at some other stock setups that triggered there, so if we come into, say, a chart of something like EA here, let's load in the stock volatility box. Very similar setup, right? We had price action breach our volatility box clouds, and that was actually 2 times. You hit the target once, then you had a retest, and from that retest, you hit the target one more time. So that was another trade opportunity, again, very aggressive. If we come into something like the Russell here, again, via the conservative volatility box clouds on the Russell, you had price action breach our volatility box sign lines, or not sign lines, excuse me, the beginning of the clouds, and you still had the target being hit, again, on a much more aggressive scale where the edge signal came only after we had already hit our target. So this is to give you an idea of much more aggressive setups when you have a catalyst behind you, in which for those that don't mind skipping the edge signal and starting to become a lot more aggressive off of the conservative models, this is one way that you could start to play that, where really you're just looking at entries at the actual entry line, which is the beginning of the clouds, and using the live scanner to really outsource finding all of these opportunities for you and just giving you a list that you can pick and choose from based off of what you're willing to trade. Now, finally, let's discuss some daily setups here based off of our daily time frame chart. So we'll start first with the Nasdaq here. So I'll load in the Nasdaq. We'll come into our daily chart here. Now, off of the Nasdaq here, the setup that I find interesting is via this squeeze signal right here. You also have, for the most part, a bearish market pulse line, right? We see recent red right here, along with now we're in a stage of distribution. So that to me suggests that, for the most part, this on a technicals basis is a bearish setup. Now, I know shorting the market actually seems a little bit daunting here. So that's where if we bring in some seasonality support, So this is using equity clock right here. If we take a look and we just focus on the S&P 500, you'll see that seasonality, the bullish seasonality starts towards the end of October, the Russell that starts in November, the Nasdaq that starts on November 9th, so that's right around the corner here. And then in the Dow, it's already technically started October 12th, which for the most part, I think the date that I was looking at was right around October 12th. And that's just based off of my own seasonality research, based off of the Thinkorswim seasonality charts, which you guys can Google if you'd like. But anyways, based off of that, I think one interesting yet very risky setup would be a short in the NASDAQ futures or even any of the major NASDAQ holdings here, where you'd be looking at trying to at least see a breather move back down to the 1272 extension in the NASDAQ. The same setup also exists on the Qs. If I load in the Qs here, you'll notice you have a bearish edge signal, bearish market pulse, same thing, right? Looking for a retest of at least a 1272. You come into say some of the top holdings here, you'll notice Microsoft, the charts look pretty similar, a little bit more bearish, right? This is where you're looking from the 1272 down to the 100 percentile range. And if we look at even say Apple today, even Apple gave you a bearish squeeze signal today, all of which to say there's a lot of text that are supporting this bearish idea. So while it does seem a little bit daunting, if you are true to technical analysis, then you do have the triggers there. Now to contrast this with a bullish signal here, that's in C Limited. This is a Singapore-based company. This is where we still have a bullish edge signal today. And if I load in our volume average right here, so if I load in volume average, you'll see that this bullish signal was on the support of some bullish volume action as well, where to me, you'd still be targeting that 1272 extension, then the 1618 extension, 173.38 is the 1272, 183.74. And if you come into the trade tab here, you'll notice fairly liquid option chain in which you can try and build out this trade. Ideally in that 45 days expiration series, you'll notice that this 180 mark right here has a good amount of open interest, a good amount of volume, where that 175, 180 takes you in between that 1272 and 1618 extension, which makes for an interesting target based off of that actual spread. So hopefully this gives you an idea of not only how to trade the catalyst using both futures and stocks based off of day trading entries, but also some interesting, I think, more longer term swing trade setups that we have setting up in the markets today. All right, hope this video helps. Take care, good luck trading, and we'll see you in the next update.